This is silver on the weekly scale. The drop in silver this past week is making it clear, as far as I'm concerned, that we have seen a complete move that started right here and terminated here. And what silver is doing now is correcting this move. I think that silver is likely to stay in this zone between the top registered here and I would imagine roughly 14.8. Okay, I wouldn't like to see it breaking 14.8. That will be too much weakness and might actually call for reassessment of the entire situation here. Do you see, if it sits on top of the support here, that's perfectly normal. Okay, we have even a zone of support. Let's say it sits around here and it bounces up and down, yeah, in this zone. That's perfectly normal, and it should actually, in my opinion, continue to do that, as it is correcting a move that took many weeks. It took almost 4 months. Yes, the rally from here, I would say 3.5 months easily. So this is not going to be over in just 1 or 2 weeks. The correction is going to be in scale that refers to the previous move. It's going to be in kind, and that's what we should expect. At this point in time, I do not see necessarily a very bearish reading for silver. I think that it met its overhead resistance here that it was unable to climb above. You can see that. We discussed the confluence of the two lines here, very, very important. I think that the reaction that it fell is perfectly normal, and I think that the set of subdivisions that have been drawn by Mr. Market in the process of coming down, they are actually bullish, and I'll show you why I think so. So let's have a look. This is the weekly. Let's go to the daily. So I'm quite comfortable with this 1, 2, 1, 2, 3, 4, 3, 4, 5. Okay, this break is decisive. It's decisive, and I don't think that it is part of a fourth wave. Yeah, for example, some might say this is a fourth wave. No, I think the fourth wave is done. Fifth wave is done. This is a correction. This is a correction to all of this. Good. Let's have a look at the 60 minutes, and you will see why I suspect that in fact what's happening here is bullish, because the market, both in silver and in gold, the market traced what seems to me to be a triangle. This is a B. Okay, if I'm right, I'm reading this on the hourly scale as an A. That's a B. That could be a 1, 2, 3, 4, 5 extended fifth. If this is the case, then what's going to happen early this coming week? It's going to bounce back. It's going to bounce back, and it's going to draw something like that over the next, let's say, 2 weeks. Yeah, it is going to come back at some point, and it's going to retest 16.2, 16.1 area. Yeah, but it's not going to be ready, in my opinion, to fly through that. It's going to meet resistance again, and it's going to come down again. So here you are. This is a possible trading plan for the coming 2 weeks. However, if it continues to drift lower, this should not shock you. It's perfectly possible. Here we go. I would imagine we are looking at almost 50% retracement at 15.06. As you can see, this was almost achieved. If my set of subdivisions here is incorrect, and the market has in store for us further drop, let's say towards this zone, obviously that is going to be modified. Yes, it's not going to be a 1, 2, 3, 4, 5 here, but the fifth leg probably will finish somewhere there, and then I would expect it to come back from roughly this zone. Okay, what I said before, if it does break through 14.8, 14.7, and it begins to sit around here, that's no good. That's no good for the bulls. It doesn't kill completely the bullish potential, but that's too much weakness, and I would begin to doubt perhaps this is coming. Okay, but right now, if you want a level that, in my opinion, is really important in the circumstances here is right here. Okay, you can see it on the chart. It's fairly clear. Is this zone? This is the heart of the trading zone drawn here. And if it does manage to bounce back and sits around here at about 15.7, 15.65, then I think it tells us that we are most likely on the right track. This is a price action that is corrective in nature, and this remains our impulsive directional move. And after the correction is over, let's say in 4 to 6 weeks, we are likely to see silver continuing to power ahead above 16.3. Mind you, trading the short term here, yes, this could be very profitable, but I would urge you to just wait a bit. Wait a bit for it to bounce back towards 15.5, 15.6, and then you know you're probably going down this road for quite a few weeks. And then it's up to you. This is the 4-hour scale. If you go for, I don't know, 15-minute scale, whatever you feel comfortable with, to trade a very, very short term, there could definitely be quite a lot of short-term moves here that you could catch. This is the chart of gold on the weekly scale. What you see here on the screen are the two alternatives. One is calling for further consolidation before a very big run that will take us well above 1,400, potentially going back towards 1,800. That is the structure that is as follows. You go up, that's your A, and then you have an A, B, C, and almost certainly gold terminating now the D leg. Okay, so I have an A, B, C, D finished. And I think that it's going to drift sideways, and I do see potential for gold to go down to 1,240, perhaps even lower, but not in a panicky way like this. Yeah, I think it could drift lower in a series of ABCX, ABC, etc. Okay, and that will terminate the B. Yeah, we will have at that point a triangle finished, A, B, C, D, E finished. And then we would expect to see this magnificent run C. Okay, I think that analyzing this chart, you can immediately see that there are two extremely critical levels for you to watch on the downside. I would say this is very, very important level. That's 1,160. It's right here, and I marked it with a red line. Okay, if, for example, we see gold in the next 3 months drifting and breaking this level, the odds will increase by a lot, that the alternative wave count is the correct one, that this is in fact an A, B, C, D, E. Then in fact the big B that relates potentially to our A, okay, that is our A, that's our B, that the B terminated, that will be, this assumption will be triggered and will be considered the favorite assumption once it breaks 1,160, it's just this red line. Okay, once it cracks the line below that, I think we should have no doubt. I think I'll give you the level, the exact level. I think it's around 1,122. But we can get the exact level. Once it breaks through that level, we should have absolutely no doubt that it is going down by a big, big chunk. Okay, so for those of you who are following it very long term, these are critical levels for you to watch. I do not think in the current circumstances that this is going to happen. Okay, I do think that there is very good scope, in fact, for gold to continue higher. I am favoring at this point the idea that it's going to drift sideways. I think it's extremely likely it's going to drift sideways. It's going to take a few months to complete this E leg, after which we should see a spectacular C. Okay, this is my preferred reading. But you know where my limits are, if you like, my limits to my bullishness, yeah? I mean, if I start seeing it declining week after week, and it reaches, even it starts breaking through the support that we have here at around 1,200, that's a bad sign. That's a bad sign. It shouldn't happen. I'll tell you why it shouldn't happen, because what we are looking for is really a drifting sideways price action that is corrective in nature. We are not looking for an impulse wave. If it begins to break down in something that looks like an impulse wave, it's just like out of place. It's not what we want, and that will be a sign of danger for those who are looking for the long side only. Okay, this is an important level, 1220. If it continues to drift down, breaks, that's got nothing to do with a corrective price action. That's too much weakness too quickly. Do you see what I mean? Now, I don't think this is going to happen. That's my thinking. I think, in fact, what's happening here is already giving us a reason to believe that the bull, the bull that is sort of behind the scenes here, preparing the B, helping to bring about the completion of the B, that bull is already sending us some signals here. And look, for example, I think coming down here on the hourly, gold traced an AB, and then it came down. That was the first leg of the C, and it went back, but it didn't go above the apex. You see an A, B, C, D, E. That's the apex. It didn't run above that, so that keeps it intact as a 1-2 sliding into a 3-4, and that could be an extended feed, similar to what happened in silver. Now, if it continues down, not by huge chunk, but it continues down, which is perfectly possible, then I'll have to revise the set of subdivisions that I put here. It is showing me, you can see the ratios that I put here. It is showing me that C could be relating to the A to the extent of 1.618, meaning that it is basically an extension of the A. You can see that, you can see the ratio right here. So ideally, for the bulls, what should happen, let's say in the first 2 trading days of this coming week, we should see it finding support at 1280 area. 1280 area, even if it drifts slightly lower, we want to see it coming back. We want to see it regaining 1300, giving us something like that. We know we are on the right track. It is possible that it will even go back to retest this level, but do not be discouraged if basically what we are going to end up with over the next several weeks, we're going to end up with an ABC and then just drifting sideways, and that's going to give you an X, and it's going to go down again. Yes, it's going to go down again, but remember, the entire price action here should have the character of basically a correction, a whole set of A, B, C, X, A, B, C, X, etc. Okay, silver has actually a clearer pattern, and if you are trading gold, I would suggest you look carefully also what silver is doing, because it could be quite helpful. Later on in the video, I'm going to cover Kinross Gold, and Kinross Gold also has very clear pattern that could be very helpful short term and also long term.